Energy Transition Now with David Linden.
Hello, everyone. I'm your host, David Linden, the Head of Energy Transition for the Westwood Global Energy Group. And you're listening to Energy Transition Now, where we discuss what the transition really means for the oil and gas and the broader energy industry. For today's episode, I have the real pleasure of speaking with Tara Schmidt, who is the Sustainability and ESG Finance Director at Lloyds Banking Group. And we'll be talking about financing the energy transition, plus a few other topics, of course. Welcome, Tara.
Thanks, David. It's a pleasure to be here with you today.
Thank you. And thank you for taking the time out. Energy markets are obviously at an exciting time right now, or an interesting time, should we say?
Yeah, absolutely. Interesting times at the moment.
So how about we start off maybe a little bit? I don't want to spend too long talking with people's biographies and the companies, but I think in this instance, it really, the main reason you're on, I guess, here, for me was interesting just to hear the kind of role that Lloyds is taking and the role that you specifically have with the bank and the work that you do with your clients. And to walk us through maybe that as a starting point is, what is it that Lloyds is doing to help the UK reach net zero?
Yeah, for those, I guess listening in that may not be as familiar with Lloyds Banking Group, we are the UK's largest commercial and retail bank. So we see that we have a key role to play in supporting the UK's transition to net zero, basically in supporting corporates, project developers, SMEs when we think about the supply chain across the UK, as well as consumers when we think about the affordability of the transition. My role specifically is supporting corporate and institutional clients on their net zero transition journeys. And I joined Lloyds, I guess, David, we've known each other for a wee while. I joined Lloyds, that's the first bank that I've worked for directly in my career. I've been working on energy transition and low carbon transition for 20 odd years now. And what I find really exciting is, one, the role that Lloyds can play across the UK. And two, the role that finance can really play around transition. My background, as you'll know, is, I'm an engineer by background. I've worked in market analysis and I've worked as a consultant. But what I've seen over the years is how incredibly important finance is for funding the transition in order to really get us to where we need to be. And I guess we'll talk a little bit more about that today, but just how important it's not just about government financing, but really if we're going to get to net zero, it's really about private finance and the role that it will play in getting us to our target.
I think, unfortunately, maybe a lot of people get excitement and an interest and news on what corporates are actually doing. But of course, they couldn't do a lot of that without finance, essentially. And I agree with you. I think it is really exciting to see that, but there maybe isn't enough focus done on it. So I'm very happy that we're talking about it today. So when it comes to Lloyd specifically, then you're saying you're one, the largest commercial. How do I say that? Did you say largest commercial bank?
Well, commercial and retail. So that's for corporate and institutional clients, SMEs, okay. And then also retail. I'm thinking about consumers. Yeah.
Okay, so you're widespread in that sense throughout the UK economy. Okay, so what is it? Which approach are you taking to that then? How are you considering your role within that transition?
So we've committed basically to reduce our own financed emissions by 50% by 2030 and to get to net zero ourselves by 2050 or sooner. So for those listeners that may be less familiar, with the finance sector, so when we say financed emissions, that's really where we're lending and investing in the UK economy and wanting to see those emissions that we're investing in financing aligned with the UK net zero target. The other thing that we're doing to really support, those commitments is we are doubling our sustainable finance funding for corporate banking to 15 billion. over the next couple of years, as well as also in that time frame providing 10 billion for green mortgages as well. So as I said, really thinking, when we talk about energy, is thinking not only about the supply side, but really thinking about the demand and all the energy uses across the UK economy, how we're going to become more energy efficient, thinking about things like heat and the built environment. So the bank is really thinking about our commitments across the UK economy. The other thing that we're doing is really, our approach entails really supporting our clients on their transition journeys. And I'd probably break that down into kind of three key aspects. One is our people. How can we support our clients? We have trained up over 1,500 of my colleagues through the Cambridge Institute of Sustainability Leadership, which I believe you have been on yourself as well. And I've recently attended. I've worked for CISL in a former life as a consultant. So it's great to see that we're training up bankers to be able to then in our discussions with clients really support them on their transition journeys. We've also launched the ESG Finance team, which, as you mentioned, I'm part of. So we launched our ESG Finance team back in April. There's 16 of us that are specialists working across our coverage teams. So with each of the, the sectors within the bank, our relationship directors that are then working with our clients as well, and helping them really think about, we know the transition journey is not an easy one to make, but the cost of doing nothing is much greater. So really working with them to think about, what's the most effective, approaches to transition journeys, and making sure that we're not just thinking about the risks, but the financial opportunities and getting to net zero. The second thing I mentioned is just around insights and collaboration. So you'd find on our, on our website, we try to promote a lot publicly and collaborating through, a number of organizations across the UK economy. So we've got a sustainability hub, which has a number of case studies, which I'd recommend anyone towards, and also thought leadership pieces, where we're thinking not just about corporates, but I think a lot of corporates now are thinking about scope 3 emissions, thinking about their supply chains. We are also engaging with a number of our SME clients, helping them think about how they're going to move on to the net zero journey. And last thing I'd mention is just around tools. So there are a number of tools that we offer publicly to our clients, and I'll tell you a bit more in detail as we get into it around some of the things that we're developing. But a few include, carbon calculator. A lot of places, companies are thinking about where do they start, is really estimating their carbon footprints, and then also green buildings tool. So really thinking about how do we become much more energy efficient with the built environment.
Fantastic. No, yeah, we should definitely unpack some of those in just a minute. Yeah, that's a very comprehensive sort of set of things. But just so, I guess someone maybe who doesn't follow the finance world that much, when you mention things like sustainable finance or green mortgages or those things, what is it about these products? What are they effectively doing? So someone's getting a green mortgage. Is that someone who's essentially saying, I'm attaching a KPI to this which has some green targets, or what are these different mechanisms?
Absolutely. So it could be that it's targets around transitioning. So for a home, it might be around improving the EPC rating of a home, or for a corporate, really thinking about some of their KPIs. So if they're setting a net zero target, well, then they could potentially get cheaper financing. So we provide discounted financing and aligning with those KPIs. Or it could be based on, just aligning with what green potentially means. So, we're awaiting the UK green taxonomy to be launched. We look a lot at the EU taxonomy. So really thinking about what entails, what's green, and being able to really support that potentially through, ultimately cheaper money for investing and getting to net zero.
Part of what I'd like to do, I guess, in just a moment is unpack some of that. But a key question anyone would have listening to you is okay, there's you're supporting all your different clients, you've got your own target, etc. So okay, maybe you have a reason for doing this, but what's kind of the overall rationale for, well, essentially you're investing yourself quite a bit of time and effort into this. What's driving that for Lloyds?
Yeah, well, some folks that have been watching recent announcements might for the bank may have seen that we have a new CEO. So Charlie Nunn came on board end of last year, and we've recently launched our new strategy. which is really reaffirming our corporate purpose. And our corporate purpose is to help Britain prosper. And we're absolutely behind that. And at its core is really a focus not just on transition to net zero, which is absolutely important, but also around social inclusion and regional regeneration. What we ultimately would like to see is, being able to commit and support ensuring a sustainable, resilient economic recovery for the UK, and where we can play a role abroad as well through our clients.
Very interesting about the purpose, actually. I think that's a very interesting factor that sometimes does get overlooked. If you don't mind me saying, in the finance world, it's not often expressed that way. So that's fascinating. Some of the other things that are out there that people are aware of, other initiatives such as whether it's the TCFD, the Net Zero Banking Alliance. What kind of influence has that had on how you're approaching things?
Yeah, well, I mean, I said, I joined the bank back in September, but I've been working with Lloyds off and on since 2017 on TCFD, and it's been amazing to see the impact that TCFD has had. But I think the Net Zero Banking Alliance and TCFD have been absolute game changers. Ultimately, what it comes down to is how do we mobilize the finance that's required to get us to net zero. And globally, well, I'll back up for a minute. I'll just talk about COP26. So a lot of people at COP26 heard lots of debate going on between governments saying how they were going to get the 100 billion together for, the developing world around climate. But if we look at how much finance is really going to be required to get us to net zero, we're talking hundreds of trillions of dollars to get us there globally. And here in the UK, we're talking about up to 50 billion a year on year, by the end of this decade. But of course, we should recognize that the cost of doing nothing is actually much greater than that. And so, we definitely need to invest. But where is this finance going to come from? And I think that's where it's really exciting. So the Net Zero Banking Alliance is part of the Glasgow Financial Alliance for Net Zero, which represents over $130 trillion in assets from the financial community. So that's from banking, from the Net Zero Banking Alliance, as well as across the spectrum, for the financial community. So really, that's quite exciting. That was probably the biggest announcement from COP26, is getting that amount of finance behind net zero. But the big question moving forwards is Mark Carney, who announced GFANZ, and some may remember was previously the governor of Bank of England and has been, since the beginning with TCFD. He was saying we need to get the financial plumbing, we need to get the plumbing right in order to allow for the financial flows for net zero. So GFANZ, that 130 trillion, is absolutely brilliant for financing net zero, but TCFD, so the Task Force on Climate-Related Financial Disclosures, is going to be a key enabler for helping getting the plumbing together to get the money to where it needs to go for net zero. And I should note, so you were asking particularly about the Net Zero Banking Alliance. So that's the banking component of GFANZ. Lloyds, we were a founding member of the Net Zero Banking Alliance. And as part of that commitment, as I mentioned earlier, that's our commitment then to get to net zero by 2050 and to get to 50% emissions reduction by 2030. So we're thinking a lot about TCFD, not just for ourselves, but how we engage our clients and advising them to leverage TCFD for thinking about the cost of doing nothing and the opportunities of aligning to the transition strategy, and also thinking about the technologies that are going to be required to get us there.
If I was to be a cynic and say, look, but the regulation isn't there to force you to do this yet, essentially, there are some aspects of it, such as the TCFD, etc., which allows you to think about it. But you mentioned something around the cost of doing nothing is greater. You mentioned that a couple of times so far, and that's fascinating. Is this about banks being on the front foot, essentially recognizing the risk of climate change and therefore the risk to the capital that they're having to lend out, beyond even corporates, you could argue, thinking that way or being forced to think that way through regulation, and therefore saying, actually, this is really important to us because we're going to be giving out money for a longer period of time here, and we need to feel it's secure. So from a risk management perspective, as such, that's really the core driver here. Is that a fair summary, or am I simplifying it too much?
Yeah, no, I mean, absolutely. I mean, we've been on this journey. So TCFD was launched back in 2017, and many banks, including Lloyd's, we've been on the journey to identify the cost, the cost and the risk around the transition, and the cost of doing nothing, really understanding the physical climate impacts, the policy impacts, consumer shifts, markets, technology, and really understanding that. And as you'll be aware, we've recently, across the banking community for the UK, have recently undergone stress testing, so CBES as it's termed, to really understanding how resilient our own financial portfolio is to that. So that is certainly one aspect, and part of the reason we've committed, to net zero. And what we want to do is recognizing those financial risks and opportunities, engage with our clients, to ensure a more resilient economy moving forwards.
But I guess for you, what I really liked was also the helping Britain prosper aspect, which is the sort of social inclusion and regional side of things. And while a lot of focus, and I think you and I talked about this before, where a lot of the focus is on the call it the climate risk, which can either be the physical cost of it, should we say, or the carbon focus. The broader picture isn't always included as a headline as such. Is that a fair thing to say as well?
Yeah, and I guess, what we've been talking a lot about, and you'll probably hear me bang on about, is it's not just about counting carbon. Carbon is important, and we have to reduce our carbon emissions in order to avert the worst impacts of physical climate change. But as I mentioned earlier, we're thinking about a just and fair transition. So really thinking about the social implications. So as part of the work that we're doing in the bank around net zero transition, understanding where we can invest from a regional regeneration perspective, where there is jobs impact and benefits, thinking about the affordability of getting to net zero, and really understanding this in a much more holistic fashion. Carbon, yes, is important, but we need to think about this in terms of a resilient, prosperous economy moving forwards, and the opportunities that net zero presents, not just about cutting carbon, but about making a greener future for us all.
You started to mention some of these as we go through. I wanted to ask you about those tools as such that you mentioned, right? There are approaches that you can take to help clients. You mentioned the carbon footprint calculator, for example. That's the first step, just to get people thinking about what impact they're having and how they can deal with that. Can you maybe just talk us through one or two, whether it's your favorites or whether it's the ones that you think they're having the most impact right now, so the tools that you're using with clients, just to give us a sense as how that's working for them and what it means as a result of using those tools?
Yeah, well, I mentioned a few tools that help with really getting a baseline. So carbon calculator tool, green buildings tool, so you can understand more about the investments, that may be required. But really, I think where we're headed and we're really focusing on is, one, ensuring credible transition plans. And I'll talk a little bit about some of the tools that we leverage within that space. So credible transition plans that really will get us to net zero. And then two, around the investment opportunities on the net zero technologies that really are going to be required. We know there's a lot of technologies out there, but they need to be upscaled if we're really going to be able to cut our carbon emissions, to net zero by 2050. So on credible transition plans, there's a few ways we look at that. I mean, TCFD certainly is coming front and center. You mentioned that it's not mandatory as of yet, but as of 2-3 days time, it will become mandatory for a number of companies across the UK. So any company that has over 500 employees and 500 million pounds of turnover will have to start thinking about sustainability disclosure requirements, which includes TCFD as part of that. So that is
And
going to become mandated.
good point. And by the time people are listening to this, actually, because we're recording it, as you say, a few days before April, then people will certainly be seeing that as mandatory. So sorry, go on.
Yeah. And so TCFD is a good place to start. And, TCFD isn't just a disclosure tool. It is actually a sustainability, a strategy framework for thinking about net zero. So it's really useful. We use it a lot with our clients to make sure, one, they're aware of TCFD, what's coming, but then also thinking about how we can leverage that for those KPIs we talked about, and, thinking about financing off of TCFD. The other thing we look at is science-based targets. So hopefully everyone knows about science-based targets, but basically setting those targets that are committing to net zero. The tool that we use around that, we're looking a lot at, is the Transition Pathway Initiative. So I've been talking about that a lot since COP26, but it's a really brilliant framework for companies to basically look at how do they get from tier 1 up, to top tier, and, what are the steps they need to undertake to really get to that kind of gold standard. But really that's thinking about the cost of doing nothing, thinking about, measuring their carbon footprint to start, and setting a pathway on how they're going to, really commercial viable action plan for how they're going to reduce their carbon emissions. And then the other thing that we're really working on in terms of the tool is net zero origination. So I think you and I were talking about this before. We're basically proactively considering all the technologies that are going to be required to get the UK to net zero. That's about 14 technology themes that we're looking at, with 5, 6, 7 technologies under each of those, but really understanding more from a banking perspective, how can we advance funding and financing to get these technologies to the scale that's going to be required for the UK to get to net zero. And that's not just an academic exercise per se, but it's really in terms of collaborating with our clients, understanding those innovators in the UK economy that really want to invest in net zero and get those technologies up to scale for what we need. And that's across everything from industry, transport, energy supply, built environment, you name it. And, we're really proactively considering how we can support that.
There's a really interesting debate going on at the moment in the market, I think, around offsets. Now, I don't know if there's a particular stance that that Lloyds has on this, or if there's a personal view that you share on this, Tara, or not. But when you talk about the pathways to get to net zero, when you talk about science-based targets, the original iteration of science-based targets, you weren't allowed to use offsets to get to zero as such. I believe there's a new iteration now that does allow it in that sense, but certain qualities of offsets. And some people go, different colors on whether this is the right thing at all or not for any industry as such to be doing. But I guess it's particularly pertinent for the oil and gas industry and other sort of industries that are high carbon contributors. So where does the bank sit on sort of offsets, and what should we be thinking about when we look at offsets?
Yeah, I mean, there's a lot of discussion going on in the bank, and at the moment on this topic, as I expect in many financial institutions around the world, especially in light of COP26 and the voluntary carbon markets as well, and really thinking about the integrity and quality of that. I think, I can't say so much on the bank as of yet because we're still under discussion. So I'll just say in terms of my personal view, but if we look at the science-based target initiative, it is very clear that we shouldn't be using carbon offsets as an excuse to not reduce our emissions to get to net zero. But that said, is there an opportunity, rather than saying either or, can we say and in terms of, can we be looking at carbon offsets today and also ensure that we're getting to net zero and truly reducing emissions? And that's certainly something that I'm very curious about. And I think there's some brilliant work being done around rating the carbon offsets, getting the right integrity in place so that we're not double counting, for instance, But we're really, starting to tackle reducing some of our emissions today. Because what's in my head, David, I'm sure you were reading as well, being passionate on sustainability, is, we look at the Arctic and the Antarctic at the moment. I mean, it's incredible to see the temperature rises. We need to start acting now and making sure that we're getting tangible action plans in to get us to net zero. So I would say carbon offsets certainly could be part of that solution, as long as we're not using it as an excuse for not getting to where we need to be, for net zero.
Absolutely. Absolutely. And the more you look into a subject like that, it's obviously open to interpretation. You talk about the regulatory side of things as well. Again, Mark Carney seems to be involved with some of these things as well, et cetera, et cetera. So there is a lot of work to do in that space, and it's probably a whole podcast in itself. But I guess, banks also need to consider that, whether it's going to be part of how they think their clients should be getting to net zero, if they're indeed trying to get there. But yes, as you say, probably for another
Do a whole podcast on that, David.
Obviously I have a slight bias here, and I'm interested in particularly in the energy sector itself. A lot of what you're saying, makes a lot of sense. I sit in the UK, you sit in the UK. I look at what we're trying to achieve. There's a lot of debate going on at the moment as to what should happen. We can maybe touch on that in just a second. But ultimately, if I think about the impact of all of that on the energy sector, in the bluntest of senses, does this ultimately mean that a company who's saying, I'm going to produce renewable energy, gets a better deal than somebody who's saying, actually, I'm going to continue producing oil and gas on working with someone like yourselves? And you're obviously not the only one. There's a whole, as you say, Net Zero Banking Alliance and other groups that are committing to helping economies reach net zero. Does someone get a rougher deal out of it because of the industry that they're in? I guess it's the simplest word to use here. Or is there a slightly different, sort of more nuanced approach to it?
Well, I mean, the first thing I'd say, and we recognize this in the bank, that in order to get to net zero is going to require an entire rewiring of our economy. As you might have heard from CISL, they've done a lot of work on this as well. And that means we have to decarbonize all sectors, right? Spanning energy supply and energy demand. And that includes power, yes, for renewables and so on, and what we can electrify. And there's a whole question on that, but also industry, transport, heat, the built environment. So we are looking across all sectors, oil and gas included, and the role that they can play. We do have green financing options, but we also have, I think the big topic we're hearing a lot about at the moment is ESG linked lending. So that's basically, and you started to hint at this earlier, so you might have been thinking about that already, but that's basically where companies commit to ambitious targets, a set of KPIs, basically to become more sustainable and resilient. And in return, then they have the opportunities for cheaper financing to help support their own transition plans. And that can cover the E, but the environmental angle, so thinking about net zero, but it can also cover the S, the social aspects around a just and fair transition, as well as governance. So there are certainly opportunities, across all energy sectors. The one thing, though, I would say is, of course, as I mentioned earlier, they need to be credible transition plans that are really going to support the UK and getting to its net zero target.
That makes a lot of sense. And I think there's obviously companies have been called different things, right? Ones that are maybe greening, and others that are simply saying we're compatible to what's going on. So I guess, as you say, there's a nuance there, and certainly in Lloyd's case, it's about having a credible plan to get to a place where you can be compatible with the future of net zero economy that we're looking to achieve.
Yeah, I was just going to add one more thing to that. So, I think the other thing I just flag is we are, in addition to looking at the reduction of our financed emissions by 50% by 2030, or, as part of the Net Zero Banking Alliance, we're spelling that out sector by sector. So we've made clear commitments, both to the power sector and to the oil and gas sector, of reducing our financed emissions by 50% by 2030. And so that is certainly part of that credible transition plan, that we're looking at as we engage with our energy clients. But we're also there to support them. So we've got clients saying, yes, I want to commit, but how do I go about doing this? We are advising our clients on that. We are also supporting, and thinking about these technologies that, well, I'm a smaller company, how could I invest in that? Well, let's think about it. There may be opportunities here where you could collaborate. And as a bank, when we're looking across the entire UK economy, where we can start to help our clients think a bit differently on the role that they potentially could play around net zero.
No, it's super, very interesting. In terms of, though, there's a lot of things, as you sort of very briefly mentioned at the start, there's a lot of things going on at the moment. And obviously, this is always a time lag in recording when things get recorded, when they get published. So that something might happen in a few weeks or so that they will record and publish. But essentially right now, we're obviously in a situation where, in particular in Europe and the UK specifically, the discussion that's going on around energy markets is I think, is a bit complex, full of hyperboles around what we're going to do next and how we're going to do them. So, no one, I don't think, has the answer right now. But is it, be great if just to get your views around what things you have started to see change, if you can, or where you think some of the changes are going to come around, whether it be, in terms of our energy strategies going forward, but realistically, what's the implications of that for the industry and therefore also for banks and how they need to think about finance going forward?
Yeah. Thanks, David. Yeah, I mean, there's a lot going on in the market at the moment. I mean, I think front and center is the tragic, and Russian invasion of Ukraine, and the impact that has had. But I think from an ESG perspective, there have been a lot of signals really since COP26, since the last few hours of COP26, on how we need to think differently about the net zero transition, and to my point, I think there's been a clear call from society that counting carbon is important, but we need to think much more holistically, back to probably the very beginning of when we first started talking about sustainable development. I think to the last few hours of the COP26 conference, and India, those tragic moments where Alex Sharma just basically breaks down because India says, they couldn't commit to phasing out coal because of their sustainable development goals. And you look at, particularly out of COVID, how difficult it's been in thinking about trying to reduce energy consumption. So I think, it was very clear, and the UN has stated this, is really thinking about a just and fair transition and thinking about the sustainable development goals. And then I think also out of COVID and Ukraine, certainly, I mean, we're seeing massive inflationary pressures, questions on energy security. How do we, maybe less so and more of Europe get off Russian oil and gas, as part of the tragic consequences in Ukraine. And I think ultimately this all just leads to thinking about a holistic view on sustainable development. And I think you might remember we were talking before is about the energy trilemma.
Yeah.
We talked about that years ago, but I think it's come back front and center, the energy trilemma. We've talked more and more about a just transition. So thinking about the environmental aspects and the social aspects. If I think about here in the UK, places like Aberdeen, how do we ensure economic, positive impact and jobs creation from net zero and the industrial clusters? But it's becoming very clear we have to think holistically also on energy security.
Absolutely. And what's interesting to me is this, in some ways there's a healthy and an unhealthy debate going on, because each side is, if I could call them sides, is pulling and pushing against each other right now, whether we should speed up deployment of renewables, or in the UK even nuclear, for example, or in the case of the oil and gas industry, we should produce more oil and gas. And it's, each one's right in one way or another, and that balance still needs to be struck. But you're right, the middle bit's kind of missing there. That, as you say, the trilemma's gone very much in one of the tries. It hasn't gone through all three of them. And how do we rebalance that? It's not an easy political thing to do, let alone a challenge to try and solve technically, commercially, or any of those sorts of things.
Yeah. And I think there's going to be trade-offs. I mean, even the most sustainable technologies have trade-offs. But I think the world has certainly moved on from when we first started talking about energy trilemma, like what was a decade ago. I'm trying to remember.
Longer,
You and
I
I
think,
worked
Tara.
together before. I mean, it's certainly moved on. And it's interesting to watch now, some of the thinking around energy trilemma. I started my career 20 odd years ago looking at low carbon technologies, for BP on Beyond Petroleum the first time around. And it's amazing to see, over the years, and especially the last few years, and just how some of these technologies that really can get us to net zero, how quickly costs are coming down, and the viability of that. And I think we do need to keep that in mind. I think the other thing worth keeping in mind on these trade-offs now is how clear climate science is. We see some of these tragic, geopolitical, challenges unfolding, and war. If you look at the climate scenarios, a lot more of that could happen in the future. And you may be aware, I mean, the UK military, the US military are starting to take this into account. So I think when we think about energy security, we need to think about this not just in the short term and getting to fixes, but making sure that we're moving fast enough and before those, as you and I have spoken about before, the tragedies on the horizon of what could really happen, and making sure that we're thinking holistically on the trade-offs, and to be able to invest where we need to invest to mitigate that.
Okay, Tara, lots of things to think about, but also a lot of opportunity to take that forward. I really like what Lloyds and what you guys are doing in terms of supporting that. That's, I think, in the right spirit as much as the opportunity that the net zero economy can present. So I think that's a very positive thing to be thinking about. And yes, that may evolve a little bit as you go through, but really thank you for sharing that with us and taking the time to do that.
Thanks, David. It's been a pleasure chatting with you.
Perfect. And thanks. I hope everyone else enjoyed listening to it as well. Please, share it with your friends, who give us a good rating, and subscribe. Talk to you next time.